Well, happy Monday, everybody. February 13th. Just wanted to take a few minutes and share some additional data with you. Wanted to start with this chart here. This is courtesy of another broker in town, Eric Bramlett. So he puts together some statistics and wanted to share this with you. So this is a chart looking at the last probably 10 months or so, comparing where the interest rate was and where contracts were coming in compared to the year before. And so as you can see, the lighter gray line is interest rates, and you can see how hard they really spiked up in the fall. Between August and really early November, went up over 7%, and it just killed buyers and the number of contracts that were being written. And so that number just dropped. But since then, between November and now, let's say the end of January, interest rates came down almost a full percentage point, and it lifted the buyers back up, coming back still below where we were in 2022, but back within about 80% in terms of contracts to where we were. There's obviously more listings now. That's a different story, but this is giving you an idea of, as interest rates come down, buyer activity is going to come back up. We are starting to feel that in January and now early February. I think any agent that I talk to right now can tell you we're really feeling the market pick up. However, it's very sensitive, I think, to interest rates. So let me show you this real quick. This is a look at the 10-year Treasury since early January to today. And what you can see is, unfortunately, it stayed nice and low all the way up until early February. But now there's been a little bit of fear in the bond market that the Fed is seeing too many jobs out there and that the economy is still too good. And so the bond market's getting a little nervous that the Fed holding on to their higher rates may last longer. And that's putting some interest in the bond market to want to see higher yields. The higher 10-year Treasury rate means mortgage rates are going to go up. So in the last week, I would argue mortgage rates we've probably seen them go up another quarter point. So now we're going to watch. So this is the chart I like to watch, the 10-year Treasury. I want to see what the yield is. If it goes back to about 3.5, that's good. If it creeps up closer to 4, that's probably going to put more pressure on buyers and soften their demand, which is going to cause pricing to adjust accordingly. So anyways, those are two charts I would pay attention to as I'm trying to look and see where rates are, how that's comparing to where the demand is coming in the market. The good news is in January, we're a little low from where we started last year, January 2022. However, we're not that far off. So we're kind of hovering late 2021 on price. Really, it's going to come down to demand and interest rates. If interest rates can stabilize in the mid sixes for buyers in terms of a primary home loan, that's good news. That's good news for sellers who can hopefully see some stabilization in pricing. And it's good news for buyers because it gives you more predictability on what it's going to cost you to finance that property. So anyways, look at these stats. I've got some more stats below in terms of information we got from January, but hope this is helpful and a good start to your week. Obviously, we will talk in more detail whether you are buying or selling, but please reach out anytime if I can help you with more data, and talk to you soon. Thanks.